Do you want to know which places in Canada are flying completely under the radar, but could explode in value over the next few years? I'm talking about towns where homes are still affordable, rents are quietly climbing, and major investors are already sniffing around. These aren't the places getting splashy headlines, but they should be. Because if you buy in now before the rush, this could be your move that changes everything. While everyone else is chasing overpriced homes in already saturated markets, the real opportunity is quietly building in these overlooked spots. But here's the one thing. Once the wave really hits, it's too late to catch it. Interest rates are still high from 2022 days. Inflation hasn't cooled the way they promised. And let's be honest, buying real estate in Canada feels like trying to win the lottery these days. But what if I told you that hidden under the noise, there are 10 markets, 5 inside Ontario and 5 in the rest of Canada? They are not just undervalued, they're poised for serious growth. Rental demand is up, supply is tight, and prices haven't caught up, at least not yet. And if you know where to look, this could be your edge in a market where everyone else is stuck on pause. I'm Linda, one of the Ragona Sisters, and around here, we keep it real. Make sure to like, share, and subscribe so you don't miss what the headlines won't tell you. So let's break this down, shall we? Starting with 5 outside Ontario. Number 1, Calgary, Alberta. It's been quietly heating up for months. Detached homes are still hovering around $550,000 to $600,000. And yet, rents are climbing fast. We're talking $1,600 a month on average. That's rare cash flow potential for a major Canadian city. So why is it undervalued? Because incomes are rising, migration is surging, and inventory is still tighter than most people realize. Calgary isn't just affordable, it's underpriced relative to its economic fundamentals. Number 2, Edmonton. Yes, this is still overlooked, but $450,000 to $500,000, you can own a solid detached in a city with booming tech and energy corridor. Rents around $1,500 and climbing. Plus, Edmonton's vacancy rate just hit a 10-year low. That's a flag for opportunity. So why is it undervalued? Because the fundamentals are solid. Jobs, affordability, and rental demand. Yet prices are still stuck in pre-pandemic mode. The market hasn't caught up to the momentum yet. Number 3, Saskatoon, Saskatchewan. Average home prices around $400,000. Rent for a 2-bedroom, $1,200 to $1,400. But here's the weird thing. Vacancy is tightening and migration from other provinces is picking up. So why is it undervalued? Because it's flying under the radar despite strong rental yields, population growth, and a diversified local economy. Investors are already watching. You should be too. Number 4, Fredericton, New Brunswick. Super livable, super affordable. You're looking at mid 300s to low 400,000s for a home. Rents around $1,200 to $1,300. It's just ranked number 1 in Money Sense best places to buy real estate. Low inventory, strong community, big upside. So why is it undervalued? Because it checks every box. Affordability, quality of life, and growth potential. But it's still priced like no one's noticed. Number 5, St. John, New Brunswick. Entry price $300,000 to $350,000. That's almost unheard of in Canada right now. Rents are inching up $1,100 to $1,200. People are relocating there for affordability, and where people go, growth follows. So why is it undervalued? It's because it's one of the last urban markets where you can still cash flow and build equity without over leveraging. Now hang on, because Ontario's got its own hidden gems that are just as compelling. and not averaging over 1 million for a home like Toronto or Vancouver. Number 6, Hamilton, Ontario. Still undervalued compared to Toronto. Average home price around $790,000. Rents are strong here, $18,000 to $2,000. Plus, GO train expansion and core revitalization keep it on investor radars. Why is it undervalued? Because you're getting proximity to the GTA without the price tag, and the upside's still unfolding. Number 7, Guelph, Ontario. Tech, education, some of the lowest unemployment in Canada. Prices sit at $700,000 to $750,000. Rents, $1,900 to $2,200. This market has staying power and still has room to grow. Why is it undervalued? Because fundamentals are strong, but it's still priced like a secondary market. Number 8, Barrie, Ontario, just north of the GTA. Still has houses in the $600,000 to $650,000 range, but average price is just over $700,000. Rents are around $1,600 to $2,000. It's got GO access, new housing developments, and a growth tech scene that's impressive. Classic long play. Why is it undervalued? Because it's still priced like a commuter town, even though it's becoming its own economy. Number 9, Simco, Norfolk County. Quiet, rural, but climbing. Prices between $500,000 to $550,000. Rents anywhere from $700 to $1,600 depending on the unit. It's not flashy, but that's the point. Growth is sneaking in here. Why is it undervalued? Because investors are chasing quiet value. This one's off the radar completely, but not for long. Number 10, Fergus, Ontario, just outside Guelph. Picturesque, tight-knit, and underpriced. Homes average just over $700,000. Rents from $1,300 to $1,600. It's the kind of town that's going to feel like Allure did 10 years ago. Affordable, charming, and suddenly not so secret anymore. Why is it undervalued? Because lifestyle buyers are coming, and the pricing hasn't caught up to the charm. So please keep in mind, these are average prices. Nicer homes can attract higher rental rates. Coming up, I'll tell you which of these 10 towns I'd personally invest in. But first, here's what you need to know. These markets aren't just cheap, they're strategic. They've got one or more of the big signals: rent demand, commuter links, infrastructure investment, population growth, or economic stability. And the crazy part, some people are sleeping on them just because they're not trending. And if you're wondering where I'd personally start, it's Calgary. Here you've got rising incomes, interprovincial migration, and an average home price that still leaves room for both equity growth and cash flow. The combo is very rare. Plus, Alberta has no land transfer tax, and that's a win for investors and end users. And it's not just a play for now, it's a foothold in a market that's gaining serious long-term traction. But trends don't build wealth, timing and insights do. That's why these towns stand out. Each one has a unique trigger, whether it's infrastructure, policy, or economic growth, that's quietly shifting the market under the surface. You won't see this on mainstream news until it's already happened. By the time it hits the news, the deals are already gone. Instead, look for the pressure points. Is rental demand rising? Is inventory shrinking? Are people moving in, not out? Is there infrastructure money flowing in? Those are your tells. You don't need to predict the future. You just need to read the present better than most. Watch municipal plan meetings, track school enrollments, follow employment growth, and even check what the developers are quietly scooping up, because they know. Believe me, they know. And once you spot those patterns, you'll start recognizing the next Fergus before it cools. And if you move fast enough, you'll be one who bought low and collected rent while the market caught up. And if you're looking to build long-term wealth, these 10 are a solid place to start. Reach out if you're thinking about buying or investing. We've got the local insights to help you make smart moves in this market. And if you like this breakdown, wait until you see what's coming next. I'll be diving into the most under the radar pre-construction towns with real 5-year growth potential. You won't want to miss it. Thanks for watching, and we'll see you in the next one.